of the Bank of the United States. Now, it is usually considered that this bank run started the Great Depression, and the New York Times reported that it was started because of a false rumor. Now, this bank failure was reminiscent of more events that had occurred. The run on the New York trust companies, which were sparked by this one, the Knickerbocker Trust Company. And you see that it closed its doors. That happened in 1907 after a run on the bank. And it, along with the panic of 1907, was the prime excuse used for forming the Federal Reserve in 1913. Now, let's take a look more recently, because in recent years we've seen the run on Northern Rock in the UK and, of course, Washington Mutual here in the U.S., where depositors ran on the bank, causing it to close its doors and the government to step in and ensure deposits. Now, this is just retail banking that we're talking about, but you also have runs these days on money market funds, investment banks that we've seen take a toll and bring down banks like Bear Stearns and Lehman Brothers. Now, why is a bank run a problem? This is a big question, right? Because banks, by their very nature, never have the money on deposit to meet all of their outstanding claims and liabilities. That's how fractional reserve lending works. You lend out more money than you have. So if everyone comes to get their money at once, or even a small fraction of people come to get their money all at once, the bank suddenly becomes functionally insolvent very quickly. And that is why a bank run is so detrimental.